Yeah, we'll talk about market structure and order flow, which is this. Yeah, we talked about liquidity, which are these, where liquidity resides. Previous daily highs, previous daily low, weekly high, weekly low, monthly high, monthly low, structural points. We've talked about ranges. Ranges.
Yeah.
Talked about ranges. Talked about ranges. How far are you there? Where's my...
I'm with you.
Talked about ranges. Now, today we'll talk about entry model, which is the main backbone for many things. So we'll talk about entry. After the entry model, now will be more of backtesting, 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 review and backtest till we have mastered the entry model. So that will be what you'll be using for entries, entry criteria. So let's go forward. Let me delete all these things. So now we'll start from, you watch the video, right? Huh? You watch that video.
Yeah, we know what you.
So we'll start from some months back and see how we capture all those entries. Now, I've not really, let me draw, I will still draw what the entry looks like here too. Then we'll look for it, we'll backtest it, see how we'll be catching those, see how you'll be catching that kind of entry week in, week out, anytime it shows on your chart. August, this September, we'll go like maybe 6 months back. This is January. January is more than 6 months now. January. Yeah, let's start from January. January till now is almost 8 months now. But
Yeah.
yeah, 8 months. Let's backtest from 8 months data. On your own, you cannot equally backtest 1 year, 2 years data, something like that. Me, if you look at here, when I was
No, sometimes on the trading view, it's not allow me to go, I think, below 3
5,000
months back.
bars. No, 5,000 bars. On 1 hour, 5,000 bars can be up to a year. 5,000 bars.
Okay.
It depends on the lower time frame. With 5,000 bars will be some few months. Then 1 hour, 5,000 bars is more than a year. And so all these ones are
Okay,
my
okay.
back. These
Okay, I
ones are
understand now. Makes sense.
those ones are back testing. See, I was like, how can I get all these moves week in, week out? All these moves, see them. So any day I come into the shop on the new week, I'll be looking for this same thing over and over again. Looking for this same thing over and over again. If you take them back almost a year and
Makes sense, yeah.
this is how you backtest. You backtest, you go back to the data, previous data, because that is your backbone, previous data. Previous data. This is December. You go reach.
Okay. I'll be the waste trying, but the thing, look, as it just tell me now, so I guess increase my time frame.
Yeah, that's increase your time frame. This one's supposed to reach 2 years. Supposed to reach 2 years. At least that one I was supposed to reach 2 years.
Okay.
This is July now, 2023. How many things making reach January?
Makes sense, yeah.
Supposed to reach. So after this, we'll go do like 8 months. So on your own, you can take it back. But based on subscription, you can even do till 1990 something. So based on subscription. You know, so the more you subscribe, the more they will give.
Yeah, more features.
Mm. Okay, where is it guy? Hmm? Yeah. After today now, nati 8 o'clock now, now you go work.
I come out at 6.
Okay.
Yeah.
So now,
Like,
this is where we start now. This is 8 months. This is January 2nd, 8 months. So now, unlike the entry model, look, this is what it looks like. Entry model. We have talked about everything like market structure and order flow, talk about liquidity, talk about range structure. Now, this is what we mean by entry model. Now, this is where price closed. Maybe let's say this is Monday, or let's say this is Friday. If this is Friday, this will be weekly high. Now, price opened here and traded down and go back and did what? And clear this high. Now, we'll be expecting for price to do what? To come and take out this low as a break of structure. If price takes out this low as a break of structure, we will now have this guy as our what? Our POI or order block to work with for price to do what? Trading to continue down. But in a situation whereby price takes out this guy and did not break any low and continue going high, that is it. There's no trade for us. You understand? But since price broke this guy, clear this is grab this liquidity here. Since price what? Grab this liquidity here. Broke structure,
yeah.
broke structure to the downside. We have hope that price will do what? Price will trade into that guy to do what? Continue down. The same case when you have to do with what? Bullish market. Understand? I don't know if you understand it based on this diagram.
Yeah, I'm getting you, I guess.
This is a bearish market.
Yeah.
Price has been trending down. Now, you expect price to do what? Maybe price has been trading down. You don't know, normally is trading. Now, you came into the chart and you see price opened here and made a high. And did what? And took out this guy. And did what? And break this guy. And break this guy as a break of structure. After it must have cleared this liquidity, this sell side liquidity. Now, this is our guy to work with here. This is the guy we work with because we now wait for price to do what? To trade down here. To do what? And give us buying opportunity to clear all these what? All these things are liquidity. To clear them. To clear them. Understand? Once you know your trend, your market structure. You already know market structure. Series
Mm-hmm.
of higher highs, whether it's bullish or bearish. You already know your liquidities. Previous daily highs, low, weekly highs, low. You know your
Pinpoint.
Now, you come, you see when price traded into what? Daily highs or daily lows and break structure to the opposite side. You now know that boom, we are already what? We are ready to what? Change trend. Assuming it was bearish. Now we broke, we took, now this is bearish market structure. Now we clear this liquidity. This is a day's previous daily low. Price grabbed it and did what? And broke structure here to the upside. You already know your range. This is your range. This is your range. Now, this is the guy that caused the break of structure. This guy here is the one that caused the break of structure. So this is where your POI is, the other block. You set your entry limits here. For price to do what? Come here for you to what? Continue up. As simple as that. Let's go to the chart so that you know what I'm talking about. Let's go to the chart.
So that means you always use like buy limit or sell limit.
Yes, now you pending order. Sometimes when you're on the market execution can work. So
And use buy stop to.
all of them. Pending order.
Okay.
Where do we draw this thing? January. Still start. That's it. All right. Okay, let's say you came into the chat. What is today's day? Yeah, this is Wednesday. This is Monday. This is Tuesday. This is Friday. Yeah, this is Monday. Now we came on. This is Monday. Price started here on Monday, January. Nothing happened. Price traded down. See, there was no. As if you are now, if you are watching closely, there is no liquidity graph. Price is just what trending down. Price is also what trending down. There's no what liquidity graph. Price is just what trending down. So now see where price grab liquidity. Price broke this high. Price supposed to be trending down normally, but what did the price do? Price broke this guy. But it failed to do what? Clear this structure. Price grab liquidity here. This is the guy that sponsored the grab of that liquidity. This is the guy that sponsored the grab of that liquidity for price to do what? To break this guy. But price did not come down here to break structure, to show us a continuous down. So we will not do anything. We don't have an entry. So we'll move to the previous week. We'll move to the previous day. Now this is Friday. Nothing happened. Now this is Monday. We come to the next week. This is Monday. Monday opened here. Monday opened here and traded above here. Tuesday opened here and did what? What did Tuesday do? Tuesday, this is Monday low. This is Monday low. Tuesday what? Tuesday grabbed it. You understand? Is this not Tuesday? This is Monday high. So now, after Tuesday grabbed this Monday low, it went high and did what? And break structure to the upside. Now, first of all, you have known your range. This is your range. This is your range. This is your range structure. We'll talk about range structure. Let me delete it. This is your range structure. Number one. Number two, this is your POI. The guy that caused the break. This is your POI. This is the guy that caused the break of this structure. You understand? Number three, this is the guy. This is the guy. This is the guy This is another. This is the guy that caused the break of structure, number one. Then this is the guy that caused the liquidity grab. He's the guy that traded, that sponsored this Tuesday market to what? To take out this Monday low. To take out this Monday low. You understand? So now, look it. Monday opened here. Monday opened here and made a low before making a high. Now Tuesday opened here, somewhere here, and traded and do what? And grab liquidity here from Monday low, and grab liquidity from Monday low, and traded up and do what? And broke structure to the upside, leaving for us a range to work with. A range to work with. This is the range that he gave to us. Let me measure this range. This almost what? This 60, almost 70 to 80 pip. This 84 pip range. This is enough for us to make a lot of money. 84 pip range. This is what price left for us to work with. Now, how can we engage now? We mark out our what? POI. This is the guy that sponsored the break of structure to the upside. After price, I did what? Grab liquidity. Did you see how price traded inside it?
Mm.
And
And bounce back.
And bounce back. As simple as that. As simple as that. You see? As simple as that. Take your trade. You get your what? This your almost. You get your one trade. You do what? You move. You see it.
Mm.
This guy, you don't, I go beat you. I pick.
Allow the boy, I beg. He won't learn wetin Papa dey do.
My journal 9 days.
Okay.
Oyibo people, they listen to what we are saying. Okay, let's move. Now you have got, let's say this, this thing happened from Monday to Tuesday, you got this setup. And this setup played till Thursday. It matured till what? Friday. Let's say the whole of the week, you got 3%. That is it. Now you move to the next upper
So
week.
that means it was consolidating throughout.
It was not consolidated. Price was moving, but you have not gotten your what? Your entry model. Price was
Okay.
moving, but you have not gotten your what? Entry model. You see, price was moving. You see? But you have not gotten your what? Entry point. Now let's move to the another week. Now this is what? This is Friday. Now this is Friday closed here. Monday started from here. Monday opened here. There was no break. There was nothing. It traded down. It traded down. Nothing happened. Tuesday, nothing. Tuesday open. Okay, look at where Tuesday open. This is Monday. Look at where Tuesday open. Tuesday open. Took out this Monday low, but there was no break of structure. As it took out this low, it's continued what? Falling down. Nothing happened. Nothing happened. Wednesday, nothing happened. Nothing happened here. There was nothing. There was nothing. See what? This month, this is Friday.
It's another week.
This is another week. Nothing happened here. Another week, nothing happened. Otherwise,
So like that, you will not take any trade this week then.
I will not take any. Once I don't see my entry, this thing, my entry model, there is no trade for me. That's how disciplined a trader should be. That's how disciplined a trader should be. There was no distance. So we'll move. We'll move to the other week. Now, this is Monday. This is Monday. This is Friday. This is Friday opened here. This is Monday. What does Monday do? Monday, you are seeing it, right? Monday opened and did what? And took out, this is Thursday, previous Thursday high. This is also a daily high. Previous Thursday high. That's what. Am I? Okay, no, look at it. Monday opened here and did what? And traded down. That week, Monday range. Monday traded down. Then Tuesday opened here and did what? That's same thing that happened the other week. And grabbed liquidity from previous Monday high. And did what?
And down.
Did what?
Broke structure.
And broke structure to the downside. This is also a break of structure. If we extend them, this is also a break of structure. Understand? Now, it left for us what? A range for us to work with. Did you see that price came? It did not respect that range. Do you know what happened? Yeah, what happened here?
It not traded up and broke
It's not
structure
that
to the
it's not that it traded up. It violated that POI. Why?
Is that not a fake out?
It's not a fake out. This is news. News.
Oh.
This is news. It's not that
How
this
do
did not
you
play
know
out. Of course, I made research. You know, this kind of things.
Okay.
When something like this occurred, you ask questions. You look at the date. You look at the date. This is Wednesday, 24th January 2004. You go back and check what happened that day on Forex Factory. I've given you the link now, Forex Factory. You go and check what happened that day. This is news. This is 2 o'clock news that came. That's the reason why this thing was violated. After it was violated, what did price do? Price still what played out and still come down to your what? Assuming it was not news, you would have enjoyed your what? How many RR? It plays out, but it was just news. It was not because of news. That was why it was violated. It was a nice entry, but because of news, this entry was violated. You see it. Just like what happened to me then last week too. News took me out and still went to my direction, almost 11%. Because of that news, I don't know if you are following the interest rate now.
That was this week now.
Now
There was news FOMC. There was FOMC.
FOMC. So that is it. It still went to my direction, but because of that news, you know, when there is news, markets fluctuate, boom, 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 before it's now done and start moving. So this is just a typical example of it. But this entry is a classic entry. It's A+, A1. You understand? But because of news that violated this your other block, otherwise played out perfectly. Now let's move. Okay, this is Friday. Mainly, when you talk about EU has for the whole week, EU must give you like one classic entry that will give you like from 3 to 5%. One classic entry, EU, if not 2, but you are sure of 1. Sometimes it gives you 2, sometimes it gives you 3. On all those other ones are re-entry. But before the weeks runs out, EU must give you a perfect entry for you to make your money.
No, but
So
even if it's not sunny, it's sunny.
How far?
Yeah, I come.
Okay.
Poi ci sono che mi sa che domani è una greenhouse. Non c'è proprio hina. It's not full.
Bro, I heard. Oh,
I know.
unless you stack it up
Hmm?
like this. It's tissue. I don't know. Oh, okay. Just be giving me. Let me try.
Ganja ko, wala nang bagali.
And no electricity. I mean, there's electricity. But
You're warm. Okay, what the proof. If the wire is warm, won't it?
shift it from the right. No, bro, this whole place is right. Unless you go there. Unless you go there.
Huh?
That side. Unless you go to that side. There's no wire on that side.
So depending on this side. Maybe we don't know our
We didn't buy any material. So
maybe we don't know. That is in our mom. I don't think we are here that oh, yeah. Not sure. I get you. My ambition is to have a container sequel for
this one.
Apa Ramon Phil, tell you what's up.
But you're not gonna dry first. Of course. Yeah, but you're gonna dry first.
Fireworks.
Wash
Yeah,
out
yeah,
the wax,
yeah, yeah. They can just soak the white in bleach or something.
True shit.
Yeah?
Yeah, that's true.
Yeah.
But this one reducing the bucket upstairs, no? No.
No, I soak it inside here. Put the bleach inside here.
I don't know you can do that. Yeah, but I've never heard that coming.
Yum, 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 yum. In your mouth, down your throat, right down to your tongue. Food, food, food.
Guy, they watch my story.
So,
As I don't say, you guys see this guy the watch.
oh man, well, now finish that food. Hmm.
Post the end. I go post the end.
Oh, wow. Which
Don't you
kind
work?
recipe be this one? An African one I've been in London.
The African.
Na London food.
Yeah.
How far I done day through?
I almost. I'm gonna come now.
Okay.
Yeah.
Surprise markets with
Omnipotent, omniscience is the Lord. Omniscience, omnipotent are you, Lord. Jesus.
Right. Checking this thing now. Right. I have my answer. You close it. Yes, good. Yeah. Sorry. Sorry. I have me no vex. I don't come back. I'm active. I'm active.
Oh, well, before 4 minutes,
Mimi.
after this one, I will still send another this. Now, after this is Thursday, yeah. So after let's say we lost this trade now based on the news. Understand? Now go back to the other week, new week. Now this is Monday opened here and traded down to what? This is Friday low. This is a weekly low. Price traded down to what? Weekly low and grabbed liquidity from weekly low and did what? And broke structure to the upside. We dey see the principles. Liquidity grab first, structure break second, POI third, and do what? You take your entry. Liquidity grab first, structure break second, POI third,
Yeah.
you take your entry. Liquidity grab first, structure break second, you do what? You take your entry. This is 4 hour. Right, so this is a low that was made last week. Let's say this is Friday now. This is Friday low. Friday made this low. After this trade must have played out, but we missed it based on news. So this is the low price made on on Friday. Now this is where Monday opened. Monday opened and traded below that Friday and grabbed liquidity from that Friday low. Friday low, that's a weekly low. And traded back up and did what? And break structure to the upside. Leaving for us what? POI for us to work with. You see how price came back to that POI and respected that POI. And tap into that our what? POI. And see for what? Buy side. Buy side liquidity. After price tapped us in. The next, know your exit. Know where you are taking your
profit. It's important, exactly.
Yes, know where you are taking your profit. You are taking your profit to the nearest high. Buy side liquidity, your nearest high. That is the range price makes. I've talked to you about ranges. This is the range you are working with. This is the range you are working with, not this whole range. So if you are waiting for you to take profit here, if you are waiting for you to take profit here, you would have gotten, maybe you end up being on break even. If you are waiting to take profit here, but this is your range. This is the range price presented to you. This is the range. This is the guy that broke structure. You took out liquidity, broke structure. Oh, this is your range. So after you took trade here, your nearest buy side liquidity is here. So you take your exit here. This is 4 hours. If you reach 1%, this is 4%. 4% of 10,000, 4% of $5,000. You big part that now you're supposed to know now. You understand? So that is it. You exit here and you move. You go to you wait for another next or what? Another opportunity. That's the way it works. You wait for another opportunity. You move. This will off in less than 1 minute. So I'll send you another link. Now this one is the Thursday, Friday. Friday ended here. See. And this is also news. This is news too. If you see candle like this, it's news. So that is it. So we'll move to this is Monday.